Good morning. Final day of the week, of course, and well, things are a little quiet. We've got, well, let's talk about yesterday, and actually just generally this week. It's been obviously a positive week for equities, and actually if you're looking at some of these European indices, then it's actually been, well, a week full of upside. I'm just going to check on, if you check like Eurostoxx or the DAX, we're looking at what, 1, 2, 3, 4, 5, 6, 7, we're looking at kind of 7 up days in a row. Nice and bullish. Let's just have a look at this DAX move on a daily chart and just kind of think about percentage gains, because it was a big move to the downside, of course, about 14% over a space of a couple of months, and we're now up to yesterday briefly up through the 61.8 fib level. But if you're looking at it in terms of percentage moves from the bottom, that's the 8th of July low, to yesterday's high, that's more than 10%. So actually the move higher yesterday for the DAX got the DAX 10% off the recent low. So pretty impressive. Of course, most of it's Greece related, and that certainly helped yesterday with, well, a couple of things really. Just the fact that the EU finance ministers have finalised the deal for Greece to get this bridge loan, 7 billion. They need it because half of that's going to be paid to the ECB on Monday, a 3.5 billion repayment to the ECB, so that is now going to be delivered. This money is going to come from the EFSF, and perhaps the big event today is the Bundestag voting on this, and most likely they'll vote it through. So, this Greek thing is just drifting out or away from the headlines, and it's calmed the nerves. Also, of course, we had Draghi yesterday speaking, and he helped as well, because perhaps in a surprising move, he increased the ELA funding, not by much though, it's got to be said. It was about, approximately around 900 million, which, on the face of it, 900 million is a lot of money, but when you compare it to the funding that has been extended to the Greek banks already this year, then it pretty much is nothing, because the funding ceiling's up to 90 billion. So 900 million alongside 90 billion is pretty insignificant. But, they raised the ELA window. The surprise about this, perhaps, was the fact that they've done it already. And, they've done it before, before Germany have voted through this bridge loan. I think it's just there's been a big destruction of trust in Europe, of course, at the political level over these last few months. And perhaps Draghi here just trying to do his best to restore trust. It's a bit of a... it puts money on the line, of course, and it says... We acknowledge what Greece has done. We acknowledge what Tsipras has managed to get done this week in terms of voting through these reforms. Yes, there's a huge argument to say, really, it doesn't matter what they vote through in Parliament, because ultimately they'll never end up doing them. You can certainly argue that strongly, but for now, this is Draghi just giving Tsipras a bit of a nod of approval, and so the Greek banks get a little bit more funding. Don't think capital controls are going anywhere though. It's still going to be 60 euros, not 60 billion euros. 60 euros a day will be the amount you can pull out of the cash point. And I would say, when they implemented capital controls a couple of weeks back, and it's a bit of a nonsense. They say, capital controls were going to be in place for 2 days, I think they said initially. Then they said a week. Now it's capital controls in place till I think they got the 19th of July. Is that right? No, that's a Sunday. Maybe it's the 29th. Anyway, they've perhaps put another week on it. Look, capital controls will be here till Q4, I think, until you get bank recapitalisation, which isn't going to happen until you get the more extended negotiations on the more formal long-term bailout until that gets done, and that could be a few months, only then will the banks get their recapitalisation, only then will they be able to operate normally. So I would say you've still got capital controls for the foreseeable future, and I mean several months. And, of course, this is a big negative for the Greek economy. So this saga continues. It's just that we've had some real, some decent positive developments continuing yesterday, helping with the upside. If we look at the S&P, you add in the earnings yesterday, so we had some decent numbers from the likes of Google, some decent numbers from Goldman Sachs, Citigroup, so some pretty good earnings numbers yesterday, which helped along with the improving Greek situation. We had jobless claims that came in nice and low, a 29th week in a row of jobless claims below 300,000, which is a pretty impressive run of form. And so the S&P almost, not quite, but almost getting up to the June high. So the 22nd of June, 21.22. Yesterday's top was a few points just short of that. And, in a week where we've had Yellen delivering her semi-annual testimony and we've had an ECB press conference, neither of those events really had much of a market impact, or not an obvious one anyway. And so, I think the debate can move on now. I think as long as Germany vote through this bridge loan in the Bundestag today, which is most likely they will, and then Greece will make this payment to the ECB on Monday, finally we can perhaps stop talking about Greece. And I, for one, I'm ready. I'm ready to stop talking about Greece. And so perhaps we can move forwards and look at other stuff, because we've got earnings season ongoing, and we'll talk about this later as well perhaps. We've got numbers from General Electric and Honeywell today. But so far the earnings season's been probably better than people were expecting. You've had about 70-odd% of companies who have reported so far, and it's only about 10% of the S&P 500. So about 50 companies. And they've, by and large, beaten expectations. About 70-odd% have beaten their earnings per share expectation. On the top line, the kind of revenue side, it's been a bit more balanced. About 50% have beaten, 50% have not. You've got some companies whinging about the strong dollar and that having a negative effect on their top line. But so far, yesterday was a good day for earnings. Whether that is going to be the consistent theme for this earnings season, I'm not so sure. But the S&P's up towards the top, and look, the all-time high, 2134, it's in sight. We're like 0.3% off the all-time high. In fact, the Nasdaq closed at an all-time high yesterday. Google produced some good numbers, that's for sure. Actually, I'm just looking at my Nasdaq futures chart. That is, on the futures front, that's not true. So it's the cash market close yesterday for the Nasdaq that was a record closing high. It's not true on the futures market. It's kind of similar to the S&P chart, the Nasdaq futures chart, in that we're kind of up around levels seen. We're kind of up top of the range, let's put it that way. Top of the range that's been in place for the last few months. Whether this S&P can make a move and break the high, can it make new highs? I mean, let's go to a weekly chart and just have a think about whether that's possible. Can the S&P make a new high, and can it turn up to, 2200, for example? Of course, the big barrier is that all-time high set in middle of May, 2134. So this is on the continuation chart. Can that happen? Potentially, I think it could happen. Well, I'm not sure about 2200, but we might get new highs like 2150, but only on the basis that the Fed don't hike in September. And we're close enough now. We've got a Fed meeting in 2 weeks, and then the September meeting is 6 weeks after that. So we're 8 weeks away from that first kind of potential month for rates to start climbing. And it's been quite an interesting week, not so much from the Fed in terms of trying to change our guidance about rate hikes, but more so for Mark Carney. He's been very vocal this week, again yesterday, making comments, trying to steer our expectations nearer. Probably start of the week, average market expectation for when are the Bank of England going to make a move on rates. Average expectation was August 2016. I think Carney's done enough to bring that forwards by several months, talking about how rates are going to go up sooner than you think, talking about how rates have been at 0.5 for really for too long, and we've got to really start thinking about building some ammunition for the next downturn. And the only problem these central banks have, and I include, well, really, I'm just talking about the Bank of England, and I'm talking about the Federal Reserve. Of course, the problem they have is there enough growth, is there enough sustainable growth for these economies to weather the storm of a rate hiking cycle? And there's a big question mark over that. And as it stands, they don't think so, otherwise they would have hiked. So, they've had the luxury of low inflation, but of course this low inflation scenario is probably going to stay at least to the end of the year, and this drives a global growth outlook that is pretty depressing. But from a cable point of view, it's been a decent week, and in fact, off the lows of the 8th of July, you've seen the pound recover against the dollar. Perhaps a lot of this is thanks to the Eurozone improvement. The pound definitely benefits against the dollar when you're getting Greek risk reduced. And then it's also thanks to Carney and his comments. Okay, so cable's on the up, but it kind of, in terms of resistance, I'm just going to move this line. We've got a bit of resistance coming from the kind of lows we had in the final week of June, the 24th of June low, the 29th of June low. This is kind of just capped the upside. And if you just look at this wave lower that we've had over the last month or so, and put a fib series on that, then we're up at kind of the last 2 days we've closed around the 50% fib level. I mean, this morning we're higher, of course, but we'll see where we get to as we go through the day. But definitely, perhaps Carney's comments trumped the lot. In a week of central bank speak with Yellen and Draghi, perhaps Carney that's delivered a message that's more different than previous messages, whereas Yellen kind of just sticking to the script. Let's look at the euro dollar, because yesterday more downside initially, then some upside. I mean, you had a pretty decent move at like a 70 pip move to the upside off the kind of going into the US afternoon, off Draghi and so on, but it never really looked sustainable, and we drifted lower. So we're definitely on a downward trajectory, and a lot of this is technical, because yesterday saw us take out that low point from the start of July, so new low for the month, and the 109 handle is just about capped the upside this morning. And really you've got to expect, I'd say favour the downside here. I'd expect the 27th of May low, 108.20, to be tested. Whether that's going to happen today, perhaps not. We'll see. We've got some interesting US data, and so let's actually bring the calendar in. There's not really much going on this morning. We've got the vote in the Bundestag, which is most likely going to be a yes. I don't see there being too much risk there, and so outside of that there's no data out of Europe of any note, but we've got quite a bit of US data this afternoon. So we've got some June final inflation figures. So CPI is expected to, on an annualized basis, edge marginally higher from 0 to 0.1, but the core number's more important at this point in time, and that is expecting to rise from 1.7% to 1.8% on an annualized basis. Okay, so inflation numbers, we've got housing numbers also at 130. Housing starts, we're looking for a number of 1.1 million, above 1.1 million on both, and these are very punchy numbers, very strong, very healthy. We'll talk about these nearer the time, but that's due at 1:30. We then got 3 o'clock University of Michigan consumer sentiment numbers. This is important as well, and we're expecting a number that's pretty much in line with the June reading, which was 96.1. And we have some earnings from the likes of General Electric and Honeywell. Okay, So this is the lineup for the session. So it looks more interesting this afternoon from a scheduled news flow point of view. Okay, so I'm going to leave you to it for now. We'll be talking through the day, of course. Enjoy the session. Thanks.